Invest Africa, proudly brought to you by KPMG.
Hello and a warm welcome to Invest Africa. I'm Kukuletu Tsele. Thanks for joining me. Access to water is said to be a human right, but it's estimated that 2 out of every 3 people will live in water-stressed areas by the year 2025. In Africa alone, it is estimated that 25 out of 53 countries will experience severe water stress within the next 10 years. With global warming causing unpredictable weather patterns, water is said to become more precious than gold. From an economic perspective, water scarcity poses an immediate problem for agribusiness, fisheries and ecotourism. Time now for us to delve into this further to share their insights on the current water crisis that we are facing across the continent, and more importantly, what kind of capital needs to be implemented to help address this key issue. I'm joined in studio by Oyebola Farinde, CFA Corporate Finance at AGH Capital, and in our Nairobi bureau, Wangai Ndirangu, Principal Engineer at BE Associates in Nairobi. Gentlemen, thank you so much for joining us today. Wangai, I'd like to start off with you from an engineer's perspective, and maybe if you can give us some highlights as to what the key issues are and what the current situation is at the moment on the continent with regard to water scarcity.
Thank you very much for having me in the studio. And of course, you all probably know that in the present World Economic Report, water scarcity was rated as the #1 risk to businesses. And water scarcity has 2 or 3 elements. The first is the physical scarcity, which has to do with limited availability, either in terms of aridity or unequal distribution of water resources. But the second and probably more important is the management and investment. And actually, most part of Africa suffer from the second crisis more. Of course, the first is also very important because Africa is only second to the Arab region in terms of water availability. The Arab region has about 500 cubic meters per person annually. Africa, the rest of Africa, about 1,000 cubic meters. But compared with the regions like in Latin America and Asia with 2,000 and 4,000 cubic meters per person, you can understand the stress that we have. And the consequence then is that a lot of productive sectors that rely on water, from hydropower to agriculture to domestic usage, there's a bit of constraint. But having said that, it's important to note that the amount of water we are withdrawing, despite the scarcity, is very low compared to the rest of the world. Probably just about 5% of the available water resources is being used for agriculture, where other regions in the world already are way beyond in the 60 and 70% of the potential irrigable land. So I think the focus then should be on how to enhance investment and management decision to ensure that even the little that we have is well utilized.
I'm glad you touched on the capital angle there, Wangai, because obviously that's where you come in, Oyebola. Maybe let's talk about before we go into the opportunity that might be presented by this water scarcity from a capital perspective, why it's taken us so long to actually prevent this problem before having to deal with it now. In other words, where are we falling short with regard to the allocation of capital in these kind of projects to address the water scarcity issue?
Thank you very much, Gugu. In terms of how and where we're falling short, I think it takes us back to the issue of planning, and planning at a macro level. We need to look at the stance and the position of different countries and the leaders, and what strategies they have with respect to water investment. Yes, it's primarily the responsibility of government to put forward basic infrastructure, one of which water is. I mean, water, roads, electricity, those are basic things that should be the foundation and the basis for economic growth in all economies. So we need to look at the government and the stance that they've taken there and see how they've actually made the landscape quite acceptable for the private sector to come to play in. But we first of all need to be able to establish that it's the government's primary responsibility to make sure that there is enough investment for basic infrastructure. My colleague just said now that about 5% of cultivated land is what enjoys a bit of irrigation services. I think even much more tragic is the fact that only about 10% of the potential energy sources that we can have from hydro sources is what is utilized in Africa. And with the shortage of power and with the shortage of energy required for growth as well, it's also pretty sad that we're not utilizing even the water bodies to create enough energy and generating capacity on the continent.
Oyebola, to stay with you, are we finding that governments are creating that private sector business-friendly environment in order to welcome the capital into the markets for these infrastructure projects to pick up?
There's a lot of talk about creating the landscape and doing a lot of public-private partnership. But the talk is not really translating into a lot of doing. The private sector investments are quite pragmatic. They're not emotional about investments. They would say to you that, yes, why take on the additional risk of investing in an infrastructure-based project where in the first place you might not be guaranteed of the cash flows from that project. Basic infrastructure is a bit tricky as well. It's the like of roads or energy. It's the ability of the project to generate revenues depends on the affordability of the people who would consume the utility. Also, it also depends on the ability for that particular utility to be tariffed. So if they can afford it and it can be tariffed effectively, then we have a scenario in which cash flows can be generated. And private sector investors are looking for cash flow. They want to see the money. The money is important. If there's not a track record, and luckily in some economies in Africa, there are quite good municipalities and good structures to show track records. There are basic infrastructures already laid down, but in very many places, you don't find mature municipalities or mature environments or mature subnational environments where you can now invite the private sector to come and join the government. But the first effort, like I said previously, which we cannot really overemphasize, is that the government needs to take the lead. The private sector can then be invited. For the private sector guys, they would say to you that, look, what comfort am I going to get from taking on this project? Because for some of them, they are probably greenfield, or maybe for some of them, they are meant to be developmental or rehabilitation projects. So you find out that some of this infrastructure are quite dated, some of them are old, there's a lot of leakages and a lot of losses because of old infrastructure. But in places where the environment is mature, you're able to see how the actual government body has performed, and then you can base future cash flow projections based on that. And the private sector investors get some degree of comfort. But when that doesn't exist, they would ask you, where do we get the excess return from? Where will my alpha come from? What is the risk and what is the return to me? So that risk-return trade-off and the kind of investment profile which they have is what really stifles the entry of private sector investment. Because the private sector investment, okay, let's maybe break it down and say who would be interested? Maybe the banks. The commercial banks, a lot of the times, are not so long-tailed in their investment approach. They would lend you money for 4 years, 5 years at the most. You will not get a lot of moratorium in terms of repayments and paying back capital. But you might also find some aspects of private sector investments that have long-tailed funds, the pension funds, and they may be able to consider looking at investing in these long-tail projects, matching the duration of their liabilities with the expected cash flows, which are usually long-term, on this sort of infrastructure projects.
Wangai, I'd like to come to you now to get your perspective. As you've heard Oyebola mention that it's difficult from a financier's perspective. Number one, you need the history to prove that there is something for those taking out their capital and investing it for them to gain. I want to pick your brain here on the engineering perspective of things. Then why not, is it possible perhaps then to provide some kind of incentive to the capitalists in the market to not only invest in one particular infrastructural project when it comes to water infrastructure, but the water facilities and other additional structural things that might have a ripple effect on the development of the economies that we are investing in?
Thanks. Actually, I want to add one point that, again, looking from the perspective of water supply and sanitation, you realize that in Africa, across the continent, there's been a lot of focus going to water supply issues and much less to water and sanitation. Indeed, a number of countries now in Africa have crossed the threshold of over 70% or at least 60% coverage. But when you look at the water sanitation aspects, very many countries, actually I think more than 2/3, are still below the 30% coverage. That means that besides the capital, there's also what we place as priority. And then the other aspect is that the fact, which has been mentioned by my colleague, that the private sector would better work in an environment that's more predictable. And the level or the reliability and accessibility of data is really a limiting factor. Actually, according to one report, for instance, it is said that Africa is unable to draw from climate change funding because of the number of bankable proposals or projects that can be developed, and primarily because of lack of data. And again, the private sector therefore has to do much, much more to even determine the feasibility of their business idea. So I think as a starting point, as an incentive to the private sector, is to ensure that the working environment is right, that there's a clear focus in terms of creating an environment that works for the private sector.
Tell you what, we will continue with this conversation and the theme overall addressing water scarcity and its investment case here on Invest Africa. Let's take a quick break. We'll be back right after this. Welcome back to Invest Africa. Tonight we're looking at water and infrastructure development on the continent. Remember, you can tweet us on @CNBC Africa using the hashtag InvestAfrica. Still with me are my guests, Oyebola Farinde, CFA Corporate Finance at AGH Capital, and Wangai Ndirangu, Principal Engineer at BE Associates. Let's pick up on the theme that was highlighted by Wangai just a moment ago, is that obviously governments need to do a lot more and there need to be incentives provided, and the private sector needs to play its hand here. Oyebola, you're obviously better positioned to give us more perspective as to, for the private sector, I'm sure it's not easy because when you deal with Africa, you're dealing with 54 states, each with their own regulatory issues. From your perspective, could there be more traction of capital flows to water infrastructure projects if there was more regional integration and a focus on the regionalization of these water infrastructure projects?
Yes, Gugu. I do agree with you that there's potential for increased traction in developing water infrastructure, especially when there's collaboration, not just at the minutest level, not just at like a municipality level, but when you look at nationals now coming together and having a strategy and having some kind of plan to develop water channels or dams that will solve problems not only in the countries where they are, but also to solve countries' poverty, solve problems and poverty issues in countries around them. So it does, and we already have some form of projects like that already on the continent. The Lesotho Highlands Development Authority and the Water Channel there is an example of collaboration between two countries, and it's the installed capacity of the LHDA is enough to provide the electricity requirements of Lesotho. So the continent in that regard is moving forward, but you'll find out that the funding for even that kind of projects was driven mainly by multilateral development banks. It's a bit tough really to find private sector money coming into an infrastructure project that is as basic as water. Because when you price the risk and look at it, for people for the rich, you can increase tariffs. You know, I'm going back to tariffs, and because that leads to cash flows for me. But for the poor, you need to first of all convince them how do you meter? How do you do the metering? How do you how do you record their usage? How do you convince them to even pay? And when you start paying at all, when they start paying at all, how do you increase them that, okay, this is year 2, and we now have obligations not only for interest, but for interest and capital, so you need to pay a little more. So it's a bit challenging. Last year in the UK, Thames Water put out a proposal to embark upon a super sewer system, but in a way it's been kicked at. The private sector is also being invited to come to join, but the immediate implication is that from day one, the users of water, of the sewer system in the United Kingdom would have to start paying a lot more than they used to pay, because the private sector person would not, or institution would not say to you, give us 10 years or give us 4 years to build. Yeah. Yes, give us 4 years to build, and then after the 4 years, we will now start paying. It really can't work. It won't work for the private investor. But for the big multilateral firms, the World Bank actually does drive a lot of these projects, and they stand in the first place in front of a lot of these projects, such that they give it a lot of confidence. They give the investors a lot of confidence to now join in. The World Bank, the IFC, the Africa Development Bank, the Development Bank of South Africa, actually are the ones who tend to lead this sort of infrastructure projects. And it should be the case, because they are on a multinational level, therefore countries. It's not easy to have them driven by the private sector. It really cannot happen, because the private sector wants money, they want the returns with the minimum possible risk. Exactly. And that's where the trade-off is.
Wangai, I'd like to come back to you here, not only to get your sentiments on the back of Oyebola's comments here, but also from the lessons that we need to be learning from more developed economies. And I say this because in Africa as a whole, there is a skills scarcity of individuals like yourself who are engineers and who can come up with innovative ways for us to address the current infrastructural projects. So from your perspective, lessons that we can learn from our developed economies and counterparts on the globe, what do these entail?
Right. I think right now there's quite a lot of thought going around about how to, excite innovations in water sector in Africa. And I think, of course, it's a good idea. And what comes to me to mind is the fact that in the face of scarcity, some things become important, like how to recycle, for example, wastewater, and how to view waste as a resource. And that immediately then means that we need to unlock the value by way of application of finance and appropriate technology. The second bit is that then for that to happen, there are certain requisite issues that are needed. If I take, for instance, maybe Nairobi here, you find that the efficiency of transmission of water is still very low, probably losing about, I think, by the latest report, about 39.5% of all the water that's generated is lost during transmission. So that kind of a situation does not inspire or give confidence to a private sector player that there is value, or there is value in money, or at least the cost of water sales is transferred to the consumer, which makes the product more expensive, and therefore the volumes that we would want to buy then is lessened. So I think the first thing that must be done is to ensure that our utilities are constant. The second thing that has happened across Africa in the last 50 years is that there's been a phenomenal degradation in of the catchments. And with that, you get a lot of waste coming to the water sources, which raises the cost of treatment. So some of these background issues that really the government must do to ensure that the private sector is attracted, because you don't spend more cost than necessary. But in wrapping it, just to say that yes, there is a lot of room, particularly, as I mentioned before, in the area of wastewater, when we start thinking about how we can reuse waste as a resource, but even in terms of updating the existing infrastructure. Just to, by way of example, I recall here in Nairobi and a number of water utilities in Kenya about 3 years ago, there was just an assessment of the energy efficiency. By some very basic retrofit exercise, some companies were able to save quite a substantial cost of their operating cost. So we not only look at how the private sector can come in for big projects, but even for, to save the little cost here and there, that at the end of it adds a lot of value and efficiency to the system.
Maybe Google, maybe I can come in here. I do think that it is maybe an opportunity for the private sector to come in dealing with the bottlenecks in the water infrastructure environment. Now, there are suppliers, there's also the issue of being able to make efficient current stock of infrastructure that is available. There are people or there are companies who invest or who manufacture pumps, the water lines, the pipes, and all of those. In those kind of areas, the private sector can be encouraged to play in that space, but not in the build itself. The build, the government needs to lead in. But if you must bring in, or if you must bring in the private sector at all to invest in this long-tail project, there needs to be some sweeteners. There needs to be some degree of credit enhancement for the private sector to play. So what form of guarantees would be available for the investments that the private sector investors put into the project? It's most likely will come at a national level. Sometimes you might have external guarantees from the development banks, from the multilateral development banks. We might also find instances in which we can actually ring-fence the cash flows, the revenues from those water projects away from the fiscus, such that it's not mixed up and the repayments to the loan providers are guaranteed. So the credit enhancement is really key for the private sector investor, and that's what gives him a large degree of comfort. But what also needs to happen is that when you do give credit enhancements to the private sector, then you should not over subsidize, because when you put in so much back in, then the cost of that capital being raised, we expect to be able to drop commensurately, because the more you reduce the risk for the private sector investor, then the less the cost of debt should be. So I think there needs to be a right trade-off for the private sector to really be interested in taking the deal and investing in a utility like water.
It almost sounds to me as well that we need some kind of alternative sources of funding, that maybe governments themselves who have a vested interest in their employees and the pension funds or government employee pension funds need to be the ones investing in this kind of infrastructure because of the long-term strategy here, and as you say, the view on how they'll manage to mitigate the risks there. But Wangai, just to come back to you here, are we addressing this issue of alternative sources of funding appropriately, looking at private equity maybe as an example? And more importantly, the man on the street at the end of the day is the one who's going to benefit or not benefit from this water usage. So should we be focusing on education as well from a consumer perspective and the role of SMMEs from a municipal role? Right.
I think the aspect of water, food and energy nexus comes in from the perspective that one, which has been said since Rio in 1992, that water must be viewed in all its uses. And I think when you look from the 1940s all the way up to perhaps 1980, a lot of, for example, storage facilities were developed just for hydropower. And then after that, the water was released down to the stream. Not a bad thing. But I think the point is that that investment can add more value if it's also viewed at the same time for increasing food efficiency and water supply. And
Wangai, unfortunately, I'm going to have to leave it there for tonight because we have run out of time. But it does seem as though this is a conversation that can certainly go on for quite a lot more. We need more incentives for the private sector. The private sector also needs to activate and participate effectively. And maybe public-private partnerships are the way to go. Well, that's all we have time for tonight. A big thank you once more to my guests, Oyebola Farinde, CFA Corporate Finance at AGH Capital, and Wangai Ndirangu, Principal Engineer at BE Associates. Please remember to send us your comments. The details are on your screen from myself and the Invest Africa team. It's goodbye for now.